Well, thank you, Raleigh, and welcome everybody. The first thing I usually ask everybody on one of these sessions is how many people have seen any of the candlestick sessions before. Y for yes, N for no. That kind of gives me a, a view of how fast or slow. So it looks like most everybody has, but there's enough people. Yep, now it looks like 50-50. So as I go through this, we're kind of going to be going to the next step of uh, of how to project the targets when you're trading with candlesticks after you've already gotten the reversal signals. So I'll kind of try to describe the reversal signals as we go along. So um, the first thing is that once you know that a trend direction is in progress, the question now becomes, is this a worthwhile trade? So that's why projecting the targets is important. There's two main factors. Can you also quote time frames with candles, please? I will. I'm going to be talking fast because we're going to be trying to put about 2 pounds of doo-doo in a 1 pound bag in the hour. So I'll give you as much information as I can. So why is it important for projecting targets? Number one, you want to see if the trade is worthwhile. I mean, obviously, if you've got a nice reversal and your upside potential is 4%, and on another chart, you see your upside percent is 40%, probably going to go with the 40%. So that means once you get to those reversal targets, now you watch to see what signals are occurring to start watching a little bit more diligently to see when it's time to take profits. So anytime you're analyzing trend, very simple structure. First of all, you want to know if there's a signal telling you there's been a change. It's time to get into that position. Uh, because the signals are telling you what's going on in the investor sentiment. Again, on any time frame, the definition of a candlestick signal is the accumulative knowledge of everybody buying and selling during a specific time frame. So candlestick signals work just as well on a 1 minute chart as they do on a monthly chart. I used to trade, and I still do trade the E-minis very effectively off a 1 minute, 5 minute, 10 minute chart combination. So once you know what's going on in each individual signal, you can see what the patterns are doing. The probabilities become greatly enhanced when you know where you are as far as stochastics, whether you're in the overbought or oversold area. Obviously, a candlestick buy signal doesn't mean very much if you're in the overbought area, or a candlestick sell signal doesn't mean very much if you're in the oversold area. So, um, and then on top of that, you can use every other indicator that everybody else uses, whether it's trend lines, moving averages, Fibonacci numbers, anything that everybody else is watching. Candlestick investors have a very big advantage because they can see what signals are occurring at those levels. Now, over the last 40 years, out of the 50 or 60 signals out there, there's 12 that I call the 12 major signals. If you learn what they look like and the benefit the Japanese rice traders provided for us, they also described what investor sentiment was doing to create those signals. You have a very clear understanding, about the same understanding as if you were oh, a 40 or 50-year experienced trader in the market. So once you know what's going on in each individual signal, then you can see the high probability patterns setting up. There's about 6 or 8 of those that we'll try to demonstrate as we go through here. So on my charts, you're going to see they're relatively simplistic. On my charts, I've got the 200, the 50, and the 20 simple day moving average, one basic facet for that. And that's because every major money manager in the world uses those moving averages to make the decisions about their portfolio. The advantage as a candlestick investor is you can see exactly what their decisions are at those support or resistance levels. But here's the one that's going to make you tons of money. I tell people don't try to take notes during these sessions. They are recorded. I talk too fast. We go too fast to write things down. But the one thing you want to write on your tablet, if you've got one, is the T line, the 8 exponential moving average. And we'll show why that is very critical or very profitable. So the more technical elements that you can put on your charts and analyze, the higher the probabilities there's going to be a a reversal. So moving averages are probably one of your major support and resistance levels. And there's some very simple truisms about with moving averages. For example, if a moving average acts as support and it's breached, they'll usually come back and test it to see if it's going to act as resistance. So anytime we see something like this, where you see a support level breached, the first thing they do or eventually do is come back up and test it to see if it's going to act as resistance. Now we can tell pretty quick whether it's going to act as resistance based upon what type of signals occur up here, especially if you're up here in the overbought condition of stochastics. My stochastic settings are 12.33. That's nothing set in stone. I'm a swing trader. They've just worked efficiently for the last 40 years. That if you're in overbought condition, you're seeing sell signals, time to take profits. But then the truism about a moving average is once it fails, they come back up and test it again. Notice when they pulled back, we had buy signals down here at a double bottom. Then they pulled back and did a bullish harami, which is in Western terminology, that's called an inside day. Bullish harami means the selling has stopped. And notice what type of candle came up through the resistance level second time. Good strong candle telling us there was new investor sentiment. And then once they break through a resistance level, they'll come back and test it as support. And we can see they tested it as support by doing another bullish harami, telling you the selling has stopped. We're ready for the next price move to the upside. So anytime I see this, if I'm buying right here, remember, a very simple technique for candlesticks is if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line, with one caveat to that. The caveat is the further away you move from the T line, the higher the probability they're going to come back and test it. So if you see a sell signal at an important level, like a shooting star right here at the 200-day moving average, you can start taking profits. It pulls back. The second time it comes up, notice what type of signal we have. This is the T line right here. And this is what we call a T-line crunch. Notice on the way up, one thing they couldn't do, they couldn't close it below the T-line. They go through the 200. What do? They came back, tested it, did a little doji harami. And a doji is a day of indecision where it opens and closes at the same level. And there's a simple rule of the doji. They're going to move it in the direction how they open after a doji. That positive open pretty much told us they were supporting on the 200. We're still in an uptrend. So all this does is basically the candlestick signals just give you what human nature has done for hundreds of years and will do for the next few hundred years. It just gives you a graphic depiction of what's going on in human nature. So some very simple patterns. This is called the blue ice failure. In relation to bars and candles, are there any clear benefits using candlesticks over bars? Definitely. Huge advantages.
One of the key benefits
the T-line is the 8 exponential moving average. I'll get back to your answer on the candlesticks here, benefits over bar chart. A blue ice failure named by my late friend Dave Elliott. Support level, when they break the support level, they've fallen through the ice. Comes back up, trying to find the hole they fell through. They fail. What do? They drown and go to the bottom of the pond. And what happens when they hit the bottom of the pond? There's our that was our first target. And once it got down here, what type of signal did we have? This is called a morning star signal. Look, the long-legged doji, bullish confirmation. So where's our next target? Back up to the 50-day moving average. So let me answer real quick on your the signals. The signals versus candlestick signals versus the bar chart has tremendous amount of information. It opens here, closes here. Above where it opens creates a green candle. If it opens here and closes below where it opened, it creates a red candle. That doesn't necessarily mean the price will be up or down for the day. All that means it's told you what happened after the open. And that information gives you tons of information that you don't get on a bar chart. So down here, we can start seeing where there's buy signals occurring. Other people may look at it and say, oh, it might be supporting here. We can see the bullish signals. We can see the bullish engulfing signal. It'll close above the T line. Where's our next target? It's up here to the 50. And what type of signal do we have? Another shooting star. So that told us if we were long, and we're trading up here and it closes back down here, we want to be closing out the position, because now we have a sell signal in the oversold area at the resistance level, a 50-day moving average. And what was our trend doing prior to this? We were in a downtrend. So not only is it time to get out of your long position, if it opens lower the next day, we want to go short, because that tells us they're continuing the downtrend. Let's see. Oops, did I go ahead of myself here? All right, now moving averages act as magnets. So no, I don't use MACD. I've got MACD on my charts, but they're just an added fluffy. MACD is a lagging indicator. The most important indicator that you want to use is the candlestick signals, because that tells you exactly what's going on in investor sentiment. So the moving averages act as magnets. Very simple. If you're a major money manager and you're planning, you like this stock and it's starting to drift back, where do you think you're going to look to see if it's going to support? You're going to see what it does once it gets back to a support level. How do we know what it does there? As a candlestick investor, we can see exactly what's happened right here at the 50-day moving average. We've got a morning star signal. That was our target to start watching for a buy signal. Stochastics in the oversold area. We can start buying because we've got a buy signal in the oversold conditions of the stochastics. They closed it above the T line and then broke this level. Basically, we've got a wave 1, wave 2. We're going into wave 3. It essentially just puts you in the right place at the right time. So the information that we see in the candlestick signals, and you add other indicators to it, like the T line, if we know this is our trend, that we can stay long as it doesn't close below the T line until we see that evening star signal and a close below the T line. What becomes our next target? This is our first target. There's our second target. So when it starts selling off, we can see what's happening at each individual target level, and we can see when to be taking profits on the short side, when we can be buying, and seeing what our next target is. And then once it gets to that target, we can see what type of signals we have. Barry Harame telling us they failed at the 50. Where is it? Where's the next target? Back down to the 200. Once it gets down there and we start buying on the next buy signal, where's our next target? The stochastics are probably as close to being at the market indicator as anything. As I say, I don't use stochastics. They are the slow stochastics, 1233. The T line is the 8 exponential moving average. And so anyways, probabilities of being in the right place at the right time. When David and I would go around the nation and he'd show his blue ice failure, I always gave a very technical explanation to help him, which is a high probability trade. I would always say, all right, how do you catch a polar bear? Well, you cut a big hole in the ice, and then you take a can of peas and you spread it around the hole. And when the polar bear comes down to take a pea, you kick him in the ice hole. It wasn't really a technical explanation, but everybody remembered the blue ice failure. So anyways, so once we have a buy, we can see exactly what type of signals we have in the overbought condition when we hit a resistance level. Let's see. And then once we fail, there's our next signal. This is what we call a doji sandwich. You have a big down day, a doji. And remember, a doji is an indecision day with a very simple rule to it, that they are going to move in the direction of how they open it after a doji. So once they open it lower, we know that this day and this day will be the same, which also tells us they aren't going to close above the T line, that our downtrend's in progress. Now we start looking for where our next support level or our next target level would be. And if we can see that there's a support level here, and now we're down here in the oversold area and we're starting to see indecision, that tells us this is probably a good time to start taking profits. Now again, the T line is probably the best indicator as far as showing you when a trend is reversing. You can stay long until you see a candlestick sell signal and a close below the T line. And then you can stay short no matter what your major targets are, as long as they don't close back up above the T line. So what it boils down to is, if candlestick signals are the graphic depiction of investor sentiment, the T line Nobody has the T-line on their chart, so it doesn't act like a magnet like the major moving averages, which means it's kind of a natural support and resistance level, somewhat like a Fibonacci number. So if you've got the T-line, that's like a natural Fibonacci number, and the candlestick signals, which is the graphic depiction of human nature, you combine those two, you've got an extremely powerful combination to tell you when to be out of a trade or short or back into a trade going long again. If I'm a swing trader, Dante, I'm buying based upon the a daily signal. If I'm watching it closely, I move down to my 10-minute chart. So again, the T line has truisms, and that's also that the further away you move from the T line, the higher the probability you're going to come back and test it. So anytime I'm in a profitable trade, I can stay in it until when? Look how far away we are from the T line relative to the way it normally trades. Now we have a very simple solution to that. If all of a sudden on our daily chart we see we're way up here, way far away from the T line, and we know the truism is they're going to come back and test it, now we just flip to our 10-minute chart. And when our 10-minute chart shows a sell signal and a close below the 10-minute T line, we take profits because we know they're probably heading back down in this direction. Oh, whether you're using the T line or any other moving average, the further away we move from the T line, the higher the probability it's going to come back down and test it. So we're taking profits up here, knowing it's going to come back here. We always have patterns that we will be looking at that tell us, like the J hook pattern, that if they start buying here, we can always start buying back. Or like any other moving average, the further away you move from a moving average, the higher the probability it's going to come back and test it. Okay, I'm trying to read everybody's questions. My little chat box is very small today. So you swing trade using daily charts holding 1, 2 to 10 trading days, all depending on when the what the market is doing. And so this will work on the 3-minute chart. Yes, I use, when I enter a trade, I'll use the 10-minute chart as my entry. Then when I confirm it, I will move down to my 5-minute, and then if my 5-minute looks like it's confirming the 10-minute, then I'll move down to my 1-minute chart to make sure prices are still holding or going in the same direction. Yes, the T line is available on TOS, and let's see. I don't use the 3T. The 3T is just kind of a confirming indicator for the T line. So here's what we call the J hook pattern. Strong price move. Look how far away we are from the T line. We're taking profits. And then notice what happens when it gets back to the T line. They can't close it. And notice what type of signals we have. Very indecisive in here. So I don't mind selling here or even selling here and buying back here. Back before candlesticks came along, when I got out, they weren't going to fool me and get me back in and then take it back down again. So I wouldn't get back in. Now I know what human nature does. I get out here because I don't know whether they're going to pull back here or back here or back here. But I do know that if they start coming back up here, that we have wave 1 and wave 3 that is going to be approximately the same as wave 1. So it just gives me a roadmap of high probability trades. What's the difference between SMA? Simple moving averages just uses a moving average based upon the average, or just the moving average. The exponential is they put more weight on the most recent trades, so it's a little bit faster. I do use yeah, I'm having a hard time reading because I can't make my chat box bigger. But yes, I trade stocks, options, commodities, currencies. Candlestick signals isn't for a particular market. Candlestick signals is the graphic depiction of what's going on in human nature, no matter what you're trading. So moving averages are kind of the grids of the playing field. Here's what we call the T-line crunch. Notice once they hit a resistance level here at the 50, they couldn't close it below the T-line. And once they broke through the 50, what's our next target? Up here to the 200-day moving average. This is called the T-line crunch and a bobble. A bobble is they come up, hit a resistance level, they pull back, and can't close below the T line, you can always buy back. Or even if you miss this move, you can be buying this move, because now we have a bobble and then a J-hook pattern telling us that our upside potential is the same as this wave right here. Again, this is not rocket science. This is just human nature telling us what human emotions usually do. This tells me if I'm buying right here. Do we always get moves where it's a huge move on a breakout? Definitely not. But the nice thing about candlestick analysis is it puts you in situations where the probabilities of being in the right direction and big moves is much more great in your favor. And it works on all time frames. I trade soybeans. There's my morning star signal, close above the T line. Where's my first target? Up here to the 50. Never close back below the T line. Where's my next target? Up here at the 200. Yes, this is being recorded. They break through the 200. It tells me there's more upside. Keeps me in positions when I should be. Gets me out of positions when I can see, obviously. Here I am up in the overbought area. I'm seeing candlestick sell signals. And where is it occurring? Right smack dab at the 50-day moving average, and right where it topped out before, where we had another sell signal, the bearish Harami. So I could be buying right here, because this is what we call your best friend. A doji followed by a gap up and a close above the T line. That's your high probability trade. You can trade this until you hit your first resistance level. So whether you're trading an individual stock, or you want to know which direction the market is going, there's your evening star signal. There's your close below the T line. Stochastics up in the overbought area, probably not going to support at the 50, because you got lots of juice to the downside in your stochastics, which makes your 200-day moving average in the oversold area your next target. Huge morning star signal, evening star signal, morning star signal, two of the major reversal signals. And then how long do you stay long? So you see a candlestick sell signal and a close back below the T line. Or if you're trading the trend channels, because we know exactly what's going on in each signal, there's a buy signal. Comes up here, we have hanging man and a close back below the T line. So what have we started? You can see that you can draw parallel lines. When it got back down to the support level, which was our target here, notice what we had. Lots of indecision, dojis, hammers, and then a close back up above the T line. Stochastics coming out of the oversold area. Where's our next target? Back up to the top of that trend channel. And once it gets up there, we just see our same criteria, that once it got up to that level, look how far away we were from the T line. Stochastics in the overbought area, they sell it off. It's time to take profits, because we don't know if it's going to support on the T line and then hook back up. We stay short until we see a buy signal. See if I got it here. And this buy signal happened to be another Morningstar signal at the bottom of the trend channel and at the 200-day moving average. Again, the more elements that we can put into our analysis, the higher the probability there's a reversal. Bokeh, I would say that probably 70% of my trades are positive. Now that might mean quite a few of them are up 0.3% before they fail, or they're up 300%. I just know that every time I see a candlestick signal, the probabilities, especially if they're occurring in the right place, the probabilities are pretty strong that I'm heading in the right direction. Now, a lot of people ask, what is your rate of return, or what's your average return? That I don't know. All I can tell you is, before candlesticks came along, I was the worst investor in the world. I was even a stockbroker for 8 years. And all I discovered as a stockbroker was that the brokerage firms have no more idea what makes prices go up or down than anybody else. Candlestick signals. The one truism on Wall Street is that something will disappear pretty quick if it doesn't work. Candlesticks have been around for 400 years. And the Japanese rice traders that developed this did not become rich. They became legendarily wealthy in Japan. And it was all based on one very simple, consistent factor, and that was human nature. This is what we call the McMuffin pattern. There's our morning star signal, a big down day, a day of indecision, and the third day closes more than halfway up this candle. And now we have a doji sandwich, big up day, a doji, and they open up positive the next day. That doji sandwich tells us there's still going to be more upside. So we got a morning star signal and a doji sandwich, or a morning sandwich, we call it a McMuffin. And it's a very high probability reversal. How much risk per trade? Oh, I can't get to the bottom of that question. All I can tell you is every time I put on a trade, knowing what the pattern and the signals are telling me, the probabilities are pretty strong that I'm in the right direction. This is what we call the fry pan bottom pattern. Notice how you couldn't be trading this know-how until they break out. And then what do we expect coming out of a fry pan bottom? A very strong price move. Now we get up here and we get sell signals. We take profits, and notice where they pulled back to, right to the 50-day moving average. Start back up. What type of pattern is that setting up? A J-hook pattern. So a classic is you have a very strong price move. A J-hook pattern is that's coming out of the fry pan bottom. J-hook pattern is a pullback after a very strong price move, and we know that if wave one of a J-hook pattern is going to be equal to wave three, even if we miss this move, we can calculate what the upside potential is of that move. If we have a sell signal and we can see what our target is, in this case a downtrend, and it pops up and fails at the 50, where's our next target? Back down here to the bottom of that trend. But once it gets down here with stochastics close to the oversold area, we may not have a sell signal just yet, but we're starting to take profits because it's hit that first target. Whether it's on the downside or the upside, once you get up to a level that's your target, you can take half your position off, because the worst case scenario would be if they hold back and then went up through that level, you could always buy back. But the probabilities say it's time to get out. And when do you get out? Up here. When do you get back in? When you get your next buy signal and a close back up above that resistance level. Again, this is not rocket science. This is just visualizing what human nature does time after time. At the same time we were buying Win a while back, we were buying Baba. What was our next target? Up here to the 50. Once it got up there, we could see whether it was going to go through or whether it opened lower. Remember our simple rule of the doji: if it opened lower the next day, we took profits. It was probably coming back to test the T line. So it helps us take profits when we get to our targets. If we've got a chart like this with a very strong buy signal, what's our target up here? Well, first thing we want to do when we're buying down here is to see what it does once it gets to our first target. Here's your bullish engulfing signal followed by a gap up, breaking this downtrending channel, closing above the T line. We want to see what it does here at the first target. Well, this candle told us they weren't resisting. So what's our next target? That's where you can put any other technical analysis that you want into your trading. There's a gap up here. Is it going to go straight up to that level? Probably not. So in between time, where's your targets? You can throw Fibonacci retracements numbers. Now, are these any targets that they might get to? Might. The only thing we know is if they got to one of these levels and we saw a candlestick sell signal, that pretty much confirms it's time to be out of that position or take profits. There's our little bearish Harami evening star signal. We're taking profits because what's it going to do? It's either going to come back to the T line and or the 50. In this case, it eventually reached the 50, did a hammer signal and started back up. So if we took profits here, we could be buying here right excuse me, right about the same place. The only difference is when we sold here, we didn't know how far it was going in this direction. When we bought here, we had a good prognosis or that we were going in this direction, with maybe the 200-day moving average being the next likely target. Oh, I've talked right through the opening bell. When we're buying down here, is it worth trading Apple? Yeah, we're buying the calls, anticipating that it's going to come up to the 200-day moving average. Once it gets up there, what do we get? We get sell signals. What do? We buy puts because where's our next target? Back down to the 50-day moving average. Or if we get top out at a trend channel and you start seeing indecisive trading and a close back below the T line, where's our next likely target? You can see there's a wedge formation. So at least our first trade should be back here. then possibly back down to the 50-day moving average. This is one of the best signals or patterns. This is what I call the slow curve, kind of a derivative of your fry pan bottom. It's a short-term slow curve. And where do we buy? When it breaks out through this level. Now, that's different. Remember, we just went through and said you want to be buying the candlestick buy signals when the stochastics are in the oversold area. You want to be buying a pattern breakout probably when your stochastics are already up in the overbought condition. That's where the enthusiasm is going to come in. So if we're buying right here, where do you think our first target is? We're going to watch to see what happens when it gets to the 200. Starts selling off, and then there's our doji sandwich closing below the T line. What's our next target? Either here or here. We can go short until we see what target it's going to reach. Sedge, there was that slow curve bobble. Notice how it hit the 50, did a doji, opened lower. We're closed out the position, but they're buying right back here because what do we have? A bobble confirming. Now a J-hook pattern makes for a very strong price move. When do we get out of that trade? Notice we had a doji in the overbought condition. This is part of the analysis that the the Japanese rice traders provide for us. They show us graphically what most people do. They buy exuberantly at the top and they panic sell at the bottom. So if I see a doji gap up in the overbought condition, I'm getting ready to take profits. Scotty, there's your big fry pan bottom. Hit the 50. There's a bobble. We're buying right here. What's our next target? Up here at the 200-day moving average. Once it gets up there, notice what type of signal we had at this breakout level and the breakout level of the 200. It broke right through. Where do we start selling? There's our doji gap up. We start looking for sell signals, bringing you back to the T line. Now, does every pattern work? Obviously not. But the majority of the time they do work. And when they do work, they're producing very huge profits. So if we see this J-hook pattern setting up, there's our potential doji sandwich. If it opened positive the next day and traded the same magnitude as that candle right there, what would that be telling us? That would tell us they've broken out through this level. When they open it and trade down here, what's that telling us? That this pattern didn't work. If we had gotten into it, we're right back out of it, or it kept us from getting into that trade. All that told us now was we probably have a double top here versus a breakout. Are your stops at the T line? David, usually it's a close below the T line. Remember, the important facet of candlestick signals is where it opens and where it closes. That's why candlestick signals are so effective, because those are the final decisions each day. Yes, and part of candlestick analysis also is if it tells you when to buy, the Japanese rice traders provide very simple stop loss procedures to tell you when to be back out of a trade. One of the common sense one is if you see a candlestick bullish signal and it opens positive the next day, you want to be buying. But if the bears have enough strength to close back below the halfway point of that candle that told you the bulls were in control, the bears are still in control. You close out the position. So for the last 40 years, I've heard every money manager tell you to cut your losses short and let your profits run. The only problem with that is I've never seen or heard any one of them tell you how you cut your losses short and let your profits run. Candlestick signals have very simple common sense elements that tell you when to get into a trade and when to get back out of a trade. So the gaps improve your target projections. Gaps, remember the old adage, gaps always get filled. So we're looking at a trading channel like this, and we're short because there's a little gap down here that they eventually came down and filled. Now, were we so clever to think there was going to be a big sell-off? Definitely not. All we saw was when we got back up to the top of this trend channel and saw a bearish harami, where was our next target? Right here. All we did once we got to that target was, whoops. When we got to that target, that's not even the right one. Bah humbug. When we got to that target, we just watched, or when we got to this target, we just watched to see what they did. They broke through it. That told us they were going to the next target. So if we know that things are selling off, that means we can start scanning. There's very simple scans to find the best trades. We show people how to find the best trades in less than 20 minutes each day using candlestick signals. So if we know the market's turning over and there's a little kicker type signal right at the 50 on this stock, we're going short because where's our first target? Right here. Where's our second target? Right here. Once it gets down there, we're getting the oversold area. Now we can start making decisions. Again, what's our decision? We see a doji in the oversold area and it opened positive the next day. We were closing out the position. If it doesn't open and immediately starts selling off, we know that our downtrend is still in progress. We shorted this one because it hit the top of the resistance level. There's our doji sandwich. Then they start gapping it down. Remember, gaps and candlestick signals. A lot of people say, stay away from gaps because you don't know when they're gapping it around. Candlestick signals and gaps are your best friends because not only does the signals tell you what's going on in investor sentiment, the gap tells you which way they're confirming that signal. So if I get up here and I see a potential bobble, what do I want to see the next day? Trading positive. When they do a bearish engulfing signal right here at the 50 and then gap it down through the T line the next day, what's that tell me about this? It tells me they're in a downtrend. They failed at this level. Whether you're trading the each individual stock, commodity, currency, you see a support level and they're gapping it through. Again, the further away you move from the T line in the oversold area, they're probably coming back up to test it. So you've got a lot of elements that tell you when to start taking profit, covering your short positions and going long, or seeing what type of patterns are being created. Right now, this is what the NASDAQ looks like as of yesterday, and then I think it's down decently today because right now we're projecting that if you have a wave 1, wave 2, J-hook pattern, wave 3 is going to be down here somewhere, equivalent to wave 1. We shorted this one because we had wave 1, wave 2, and then a left-right combo. Left-right combo is a bearish engulfing signal following a doji type day. If they broke this support level, probably wave 3 or wave 1 and wave 3 were going to be approximately the same. We started closing out this position, then the next day it popped up here somewhere. This gives us a much better inclination of when to start going short and when to find a target that tells you it's time to take profits on that trade. Cray, we were buying because of the little bobble. Just nice pattern. It just puts us in the right place at the right time. Now, again, does every trade work? Definitely not. I would say 1/3 of my trades don't work. But before candlesticks came along, because I had superior knowledge than anybody else that was trading, that anytime I put on a trade, it was because my superior intellect said this one is going up. And when it didn't go up, it's because people that didn't have as much brains as I did couldn't see the reason for it to go up. And then I would hold on to it until the pain was so bad, I'd sell out. And usually it was selling out at the bottom. Right now, I know when to be buying and when to be selling and what my targets are uh, on a trade. We shorted lean hogs yesterday because of the bearish engulfing signal. I don't know what lean hogs are doing right here. I can take a look real quick. Lean hogs are down some more. And where's our next target on this one? Right here at the 50. What's our stochastics telling us? That once they hit the resistance level here at the 200, they're pulling back to the next moving average. So if WW buy above E line, then where is the stop loss? It's a close below the T line. Now, there's going to be a lot of times you're in an uptrend and they close right on the T line. So we have a very simple solution. It needs to open positive and trade positive the next day to stay in it. If it opens lower, you know it's time to get out of that position. You know what the market's done over the last few days? We started recommending MTX because we had a big fry pan bottom. And what was our target when we started buying here? Up here at the 50-day moving average. And here's one that I regretfully have to say this morning. We started buying this one because of the bobble right here, nugget. We were buying the calls. We tripled our profits when we got here. We rolled out into the next price. We tripled it again, and then made more money here, and it pulled back. And yesterday we could see that it was doing a J-hook potential pattern. It wasn't closing below the T line. So unfortunately, a lot of people in our chat room, we have two chat rooms. One is for trading options and commodities. The other one is just the general stock room, learning candlesticks. But people were asking, do we buy back Nugget? And I said, I'd wait to see how it opens tomorrow. Unfortunately, it closed at around 43.40. I'm pretty sure Nugget is probably trading up this morning at around 51 or 52. And the reason for that is we can analyze why Nugget is working well because we can see what was happening in the gold price. This is the April contract, a big fry pan bottom, and this was it last night, and it's up even further. It was up 14 bucks last night or 16 bucks last night. Right now, gold is up 42 bucks, which makes our nugget chart showing us we had kind of a little bobble, J-hook pattern coming out of a fry pan bottom. It's still up pretty strong. So that's about it for doing targets on candlesticks. Let me before I answer some more questions. Oh, Raleigh, do you have the link for everybody for the let me for the offer?
Yeah, Steve,
Pat
we'll go ahead and post that link.
Okay, great. Pat's putting out a offer for 17 bucks. We have all the videos on our video set. I think it's a $147 video showing how to use the candlesticks with targets. So for three Starbucks coffees, you're going to get a lot of insights on how to use candlestick signals correctly. There it is. Okay, thank you. All right, so with that, are there any questions I can answer? And if I've missed them as we were scrolling down, do track institutional or dark pool buying? ZT, it doesn't matter who's buying. A lot of people say, oh, the amateurs buy the first hour, the pros during the rest of the day. In candlesticks, I don't give a hoot who's buying in the first hour, whether it's your grandmother or your orphan kids. I'm buying when the people are buying. Doesn't matter who's doing it. Do you include a lifetime access with your course? Corey, we have annual memberships, which are relatively inexpensive. Our chat room, we have a chat room going all day long. We usually have about 150, 250 people in there on any given day. Nellish, yeah, if you buy the $17, I'm not even sure whether she doesn't have a 30-day free trial in that. Check it. If it's not, email Abraham at Candlestick Forum and said, Steve said, give me a 30-day free trial. The monthly chat room is $97, cheaper if you buy the quarterly, but for $97, we have a chat room that is open all day long. Both in the stock trading area as well as the option and commodity trading area. And, I put out 2 or 3 stock picks every day in a video format, and it's not so that people have stock picks. It's so that hold on. It's so that the video can teach people how to use that or why that recommendation is being made. I think they take PayPal. I'm not sure. The platform we use works for Forex just as well as anything else. I don't trade Forex. I usually just trade the dollar or the euro in one particular direction. So we put out 2 or 3 stock picks every day. Now, I tell people we put them out so people learn how to trade, not just so they have stock picks. We've discovered that if you just tell somebody what to do, they don't learn anything. It's like the cop standing on the street corner and he sees this drunk weaving down the street. He blows his whistle, pulls the guy over, walks up to the car and looks in the back seat and there's a penguin sitting there. He goes, "What the heck are you doing with a penguin in your back seat?" And the drunk said, "Oh, I found him out on the street and I don't know what to do with him." And the cop said, "Well, take him to the zoo." And the drunk said, "Oh, that's a good idea. I didn't think of that." Well, the next day, the cop's standing on the street corner. And here comes this drunk weaving down the street again. Blows his whistle, pulls the guy over, walks up to the car, looks in the back seat, and the penguin's sitting there. He goes, "I thought I told you to take the penguin to the zoo." And the drunk said, "I did. He liked it so much, today we're going to a baseball game." So if you don't know why you're doing something, you might not understand what the purpose is. We teach people how to use the common sense elements of the buy signals, the buy patterns, as well as the sell signals and sell patterns, entry and exit strategies. And I say we teach people, along with the picks in the chat rooms, about once a week, we do a training session. We've got 40 or 50 training videos on entry and exit strategies, stop losses, profit taking, how to scan for the best trades, how to set up your option spreads most effectively using candlestick signals. But what we also do, instead of buying those, about once a week, we'll do a Wednesday night or a Tuesday night session. Now, I also do a Monday night for the members, showing what the markets are doing, what individual commodities are working the best. And so this system you can learn and eventually find opportunity on your own. Yes, that's the whole purpose of this, is to teach people how to use candlesticks. Now, the nice thing about teaching people how to use candlesticks is we've now got a chat room where people are scanning or searching for the best possible trades. So in the chat room, each day you get tons of very good trade setups while you're learning how to scan for all of them. The video teaches you, again, in a lot more detail than what I went into, on how to use the candlestick signals and identify what your next targets are. So if you know what your targets are, excuse me, whether you're buying stocks or looking to put on a option spread, if you know your upside potential is a certain price, now it might be much more effective to put on a spread versus just buying calls outright. Can you swing trade with the Qs, SPYs, and options to beat them? I don't know whether I can beat them 9 out of 10 times, Edie. But people always ask, what's your return on trading? Let's put it this way. I went from being the worst trader in the world to where I consistently pull money, and not just money, good amount of money every day out of the markets. I collect things. I collect classic cars. I've got 25 classic cars. Last year, I had to build a barn to put all the cars in. I collect old Victrolas, the antique Victrolas from Edison cylinder players on up to Victor. I've got probably 40 or 50 Victrolas. I collect Audubon prints. Let's just say my income is extremely good, and it's all because of one simple factor: that candlestick signals turned me into from being the worst investor in the world to where I can consistently pull money out of the market every month. Your offer link doesn't work, Frank. Email Abraham at Candlestick Forum, and he'll get you fixed up. Okay, any other questions? Let's see, right now, as I say, right now my biggest faux pas today was, yesterday people were asking, should we be buying a Nugget right now? And I said I'd wait to the open tomorrow to make sure it's opening positive. And I'm pretty sure Nugget, I can probably pull this up right now. Nugget is trading up here right now. So those calls, if you bought the calls yesterday, probably the 45s at $3, they're probably trading at about $8 or $9 right now. What do you use for screening? Nellish, we have our information is on all or quite a few of the trading platforms: TradeStation, Thinkorswim, Metastock, TCNet. Our formulas are there, and our formulas are free off the website. All you have to do is cut and paste and put them in. Is the $17 course teaches us the basics of what we need to know? No, the basics are a whole nother facet, Corey. What this video is teaching you is how, once you know the signals and patterns, how you extrapolate them into what your next targets are going to be. The T-line, Byron, is the 8 exponential moving average. It's probably the best. I've been doing technical analysis now for 40 some odd years. Very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long as it doesn't close back below the T-line. So now let's back to your question on screening. I forgot what the question. Oh, all the screening techniques, and we've got videos to show you how to set up your screens. What's the reason why you chose to write many books and teach? Dante, when I started this back in 2000, I had gotten out of the brokerage business. I was starting to trade off of candlestick signals. So I was sitting at the screen. Now, back when I first started learning candlesticks, it was when there weren't a whole lot of stuff. It wasn't the internet was just starting up back in the 80s, and so in the year 2000, I had kind of learned candlesticks, which was great for me because going from being the worst investor in the world to trading successfully, I had a lot of people in the brokerage business say, well, what have you done? How did you turn yourself around like this? And I would show them candlesticks, and I had so many people wanting to know about candlesticks because it wasn't something. You see a lot of these promos out there where people are promoting their stuff saying learn the new secrets of this or that. There is no secrets about candlesticks. It's all stuff that's been around for 400 years. So it's a process of not learning secrets. It's just learning how to use the system correctly. So I had enough people asking about it. I was even a consultant with Enron for quite a while, teaching all their people on the trading floors how to use candlesticks. And while I was there, I wrote my first book, and I was using the teaching the people on a chat room or on a website because I was sitting at the screen anyways. And I thought, this will just kind of add a little bit of money teaching people how to do this. Well, so many people become interested in candlesticks that I wrote the second book and the third book. And I'm still sitting at the screen all day long. So a lot of people say, if you can't do, you teach. I went the other way. I started teaching because I was already trading, and thought, well, if I'm sitting here, I might as well be showing people how to do it. Let's see what other questions are here. Do you like to sell options and swing trading to take advantage of time decay? No, I'm usually not selling options, or if I'm selling options, we have a whole option training course of how to use the correct or the appropriate trading strategy for the appropriate price movement or signal. So there are times, I would say 80% of our trades are probably spreads. But so we're not teaching people new trading strategies. We're teaching people how to use the appropriate trading strategy for a price movement. 8-day, let's see, 8-day candlestick signal, or the T line is the 8-day exponential moving average. Do your spreads correlate with your targets in options? Yes. If we can see there's a target and we've got 2 weeks to expiration, that more than likely in 2 weeks it's only going to go to that target, yeah, we'll sell calls from that level and buy calls at the lower price. Oh, thank you, Diane. Yes, I do enjoy my life now. Oh, we already knew that today's market and I'll take a gander here real quick to see what today's market is doing. I'm kicking myself because I knew I should have bought some of the calls on Nugget yesterday, but there are times when I would rather miss a trade that I should have gotten in than get into a trade that I shouldn't have gotten in. So right now, looks like the NASDAQ is down 41. We're still in a downtrend, and with one very simple premise. Let me go up to the NASDAQ chart. How many minutes? I got 4 minutes. All right. This is what the NASDAQ chart looked like over the last couple of days. Or was it? No, it might be. Yeah, that was a few days ago. It looked like this yesterday. Right now, it's trading down here. So what's our very simple analysis? If this is wave one, this is our bearish J hook, wave three should be down here someplace. Right now, it's trading down 41 points on the NASDAQ. So our recommendation ever since it's closed back below the T-line was we want to be predominantly short. Now, that doesn't mean that all our trades are short, because we've been long the gold stocks because of this simple chart right here. The gold is heading up strong. We were buying SA, AU, Nugget, Hecla Mining, because they're all moving in the right direction. Nellish, that is the reason as I was telling you, I've studied every single technical trading indicator out there, and the candlesticks make the most sense. And when I started learning it, the more I learned it, the more I kept saying, this just makes sense. It's just common sense put into a graphic depiction. Everything that you probably see in these charts that we can tell or train somebody, you basically say, yeah, I knew that. I knew that. I just never saw it in that graphic depiction before. Do you have a plugin for Ninja Trader platform? I'm pretty sure yes. All our formulas are over there. What's your biggest disappointment, and what was your biggest victory? Oh, I can't. Okay, Dante, my biggest victory was that I turned my being a consistent contributor to the market to being a consistent winner. My I won't call it my disappointment. Oh, I got 2 minutes. But I can remember when I first started candlesticks, I kept thinking, oh, the news is so bad on whatever stock I was looking at, but there's a buy signal. You can't be buying this one. All the news out there is bad. And the one thing I discovered was the charts are the actual decisions of investors versus what everybody's opinion is out there. So the biggest thing I discovered is you don't listen to anybody's opinion, because everybody's opinion, everybody's got one. The chart is the graphic depiction of everybody buying and selling during a particular time frame. What is the best time frame trading? Jonathan, I trade the commodities intraday. I use a 10-minute chart as my bellwether. When it's time to enter and exit a trade, I flip down to the 5-minute. If that's starting to confirm, then I flip down to my 1 minute to see if everything's still confirming the 5-minute. Let's see. All right. Oops. Silver. I think silver also has a fry pan bottom. You should be buying silver stocks. What is the red and blue lines? The red line is the 200-day simple moving average. The blue line is the 50-day simple moving average. I don't use the 100. I don't need to. Yes, we have the plugins for MetaStock. There's our whole system is over there. Saul, email Abraham at Candlestick Forum. He'll get you set up. Just tell him you saw it here, and he'll know how to get you set up. Raleigh, thank you for the invite today. Thank you, everybody, for having me. Hope to see you in the chat rooms. Thank you, and have a good day.